Good morning, everybody. Welcome to Coffee with KPP Live, the show that's dedicated to providing you with advice for life so that you can live richly and work towards the life that you've earned. My name is Kyle Roy. I'm a financial advisor with Kentucky Planning Partners. And today I want to talk about RMDs, required minimum distributions. We're coming into year end here in 2021, and we have a lot of clients that want to make sure that their RMDs are covered. And we thought, because we're getting this question so much, that there are many viewers like you out there that have questions on what exactly an RMD is. So an RMD is what's called a required minimum distribution. For those of you that are saving for retirement, you're putting money into a 401k or a 457 plan if you work for a nonprofit organization or some federal government agencies. If you're a teacher, you might have a 403b plan. These are all what are called tax advantage investment vehicles, where every dollar that you put into a traditional 401k or 403b, you don't pay taxes on those investments. You don't pay income tax, so that you can save for retirement in a tax efficient manner. But the IRS always wants that bill to come due at some point. And that's where your RMDs come in. So the IRS gives you the ability to invest without paying taxes for retirement. But when you get to age 72, the IRS requires that you take a portion or a minimum distribution from those accounts and pay taxes on those portion. So the required minimum distribution is a minimum dollar amount that you have to take from your 401k or your IRA or any tax efficient investment, any investment on which you never paid taxes. They require you to take a little bit so that they can get their tax revenue. Now, some common misconceptions. Some people think that you need to spend your RMD. That's not the case. Many people get into their 70s, they have to take the required minimum distribution. They take the money out of their IRAs, pay the taxes to the IRS, and many clients are living comfortably off a defined income. They might have a pension, Social Security, or their investment income provides them with enough to live on. So we have many clients that reinvest those dollars back into non-tax advantage investments or non-retirement investments accounts. Other people can donate. You can donate your RMDs if you'd like. The IRS has a protocol where you can donate all or a portion of your RMD, and that allows you to give more to your charity of choice so that you don't have to pay taxes on those as well. So if you want more information on that strategy, consult your financial advisor or your tax professional, and always make sure that all these distributions or any tax decisions are being handled by a tax professional. But it's important to know how these RMDs work, because the older you get, the greater the RMD is. I'll never forget, years ago, it was like 7 or 8 years ago, I was explaining how required minimum distributions work to a couple. And the gentleman said to me, he said, "You mean to tell me that the IRS forces me to spend my own savings?" And the answer is no. They don't force you to spend it, but they do require you to pay taxes on it. And the older you are, the greater the RMD will be. When you're 72 years old, at first, the required minimum distribution starts out at about 4% of your total IRA assets or your total qualified portfolio. By the time you get to 80, your RMD is about 5.5% to 6%. By the time you get to 90, your RMDs are as high as 10%, and they continue to grow. So the older you are, the greater the distribution is, the more of those dollars on which you have to pay taxes. But again, if you want to reinvest those or do what you want, you're free to do that. So if you don't take your RMDs, you'll have to pay a penalty. The IRS will not forget, nor will not forgive you forgetting to take your RMDs. If you do not take your RMD in the year that they're required, you not only would have to take that RMD from your qualified asset, but you'd also pay a 10% penalty on the amount that you would have taken. So it's always best to take your required minimum distributions. And if you don't know or don't know how much to take, or you don't know if these RMDs are applicable to you and you're looking for guidance on that, give us a call at Kentucky Planning Partners. We'd be glad to help you make sure that you avoid any unnecessary penalties and that your distributions occur on time. And if you're looking for a place to put your RMDs. If you find yourself with an influx of assets, it is the holiday spirit, and at Kentucky Planning Partners in our main lobby, we do have our Toys for Tots drive going on until Friday, December 3rd is the last day to give. So if you do find yourself sitting on a boat ton of cash and you want to give to a great organization, we love it when the Marines come and pick up all the toys in our lobby to bring them to children in need in the Louisville and greater Kentucky area. So if you have any questions on this or any other topic, specifically if you're sitting on qualified retirement dollars and you know that you're coming to a point where your RMDs are required, or you're just scratching your head wondering whether or not you're taking the right amount and you want to be sure that you're not hit with undue penalties, give us a call. We'd be glad to help you. Our phone number is 502-394-0400. We are Kentucky Planning Partners, dedicated to providing you with advice for life so that you can live richly and realize the life that you've earned. On behalf of everybody here at KPP, thank you for watching. Have a happy holiday.